Hello and thank you for joining us as we take a closer look at the precious metals market alongside leading industry insiders. Today we're joined by Gavin Brown from the University of Liverpool to discuss cryptocurrency, financial technology and the future of money. Gavin is a senior lecturer specialising in financial technology and is also author of the book Algorithms, Blockchain and Cryptocurrency. So Gavin, how long have you been involved with crypto and Bitcoin?
Yeah, thanks, John. A number of years now. I first got involved early 2016. So I was basically giving a talk to a group at the local Chamber of Commerce in Manchester, and one of the delegates there just came over to me afterwards because I've had some experience of setting up hedge funds before my academic life, and just came over to me and started talking to me generally about had I considered Bitcoins and Bitcoin funds and things. And although I'd heard about Bitcoin, I didn't really know much about it at that stage. And that kind of sparked my interest in it, sparked my enthusiasm. And then that's when I started to, first of all, research it and then started writing on it. And before I knew it, fintech and cryptocurrencies in particular were my thing. So, 4 or 5 years now, but it's been a really interesting time. And I've met some great people and got some great academic work out of it as well. So it's going really well. And it continues to, be the gift that keeps on giving, really, from an academic perspective.
Yeah, well, I mean, 2020 certainly seems to be the year for it. I mean, when we first sort of spoke about doing the interview, Bitcoin was still on a climb. It's had its ups and downs since then. It's had a bit of a rally, taken a couple of dips. It seems to be sort of steadying now. What's been happening from your side? What have you seen?
Yeah, it's obviously, because I think we got very close to the magic $20,000 Bitcoin mark, which I think for a lot of people is a key psychological. I mean, a lot of people talk about resistance levels and things like that, which I think is something that plays out. And obviously, a lot of the derivatives contracts, etc., that can be written on Bitcoin as an underlying now, have probably got that as their strike price, and therefore will have some implications in terms of the market naturally getting past that point. But I think broadly what we've seen is and one of the things I'm quite interested in. I know you've talked to other people in the past around quantitative easing and the role of central banks, and I think. One of the things we've seen with COVID is that it's a genuine worldwide issue, and therefore, despite having sector and geography diversification in a portfolio, you're going to get hit. COVID is hitting you without any offsetting gain, probably in other asset classes. Although the likes of gold and other commodities have done well in different parts of the world, but generally speaking, I think when you start to look at assets like Bitcoin and other crypto assets, because they're stateless, they're stateless by design. It means that they're not necessarily subject to the similar sort of shocks that we've seen more broadly affect the overall markets. I think the other thing to note as well that I'm kind of interested in is, and I was looking at this, so I was looking at quantitative easing levels and changes in monetary policy and comparing financial crisis with COVID-19. And it was saying, broadly speaking, financial crisis 07 to 09, the aggregate global QE was about $2 trillion, right? About $2 trillion. If you then come forward into COVID-19 crisis, if you will, the US response, so just one country, and just their phase 1 US response for QE was also $2 trillion. Now that gives you an idea of a couple of things. First of all, the fact that COVID-19 is a magnitude of order more as a crisis compared to what the financial crisis was 07 to 09. And also the fact that not that central banks are necessarily toothless, but their reliance on QE as a tool to stave off crisis, and this idea that we're moving into lower for longer rates, and the idea that potentially even going into negative rates, it all then starts to build this picture of maybe an asset with a fixed supply side, like Bitcoin, with a finite currency circulation, is potentially more appealing than what it was before under normal economic circumstances. So all of this plays into a general picture where. Not necessarily where Bitcoin's going to go to the moon, as a lot of people predict, but just that it might be an interesting and viable part of anyone's portfolio looking to, be truly diversified and also to regard crypto assets as a genuine asset class in their own right, really.
Yeah, I mean, you mentioned the, it coming close to the $20,000 mark. There was the spike in 2017, which everybody thought was, that's going to be Bitcoin's time, but it was more like a flash in the pan. Do you think 2020 is different because of COVID, or do you think people are just mature into the idea of Bitcoin?
I think it's probably a bit of both of those. And I also think for me, 2021 is going to be the interesting one, because as you know, that, from the work we've done together, John, right, one of the things that, is of interest to us is how do we value, a technology, but I was going to call it an organization. It's not an organization, but how do you value something that is decentralized in nature? It hasn't got assets you pick, it hasn't got a PE multiple. Like, how on earth do you get to grips with it? You can't do a fundamental valuation. There's no real relative benchmarks to draw on. So a lot of people looking at different valuation methodologies, and one of the ones they look at is something called Metcalfe's law. I don't know if you've come across it, but it's the idea that to value a network, you need to look at the number of possible connections, which in turn is driven by the number of people actively using something. So you can do this with a telephone network, the internet network, Facebook as a social network, and you can do the same and apply the same principles to Bitcoin. And it's called Metcalfe's law, and there's all kinds of valuation metrics around this. And if you look at this, generally speaking, from sort of 2011, a couple of years into Bitcoin's life, post the Genesis block in 2009, you generally see, leading up to about the sort of 2017-18 bubble, if we can call it that, Metcalfe's law really predicts it closely fits the actual price of Bitcoin. And really what we're basically saying here, Bitcoin will become more valuable if more people use it, okay? And therefore, I think when you look back over the 2016, 17, 18, we saw a surge of people looking to buy, not many people looking to sell, but not really a great number of use cases in terms of more people using Bitcoin. So the extra price surge wasn't really warranted. And obviously, it's an easy thing for me to comment on in hindsight, right? But that's how it looks, if you like, from an academic perspective. I think the difference, what we've got now in 2020 and moving into 2021, there's a lot more organizations coming out and talking about Bitcoin as a genuine asset class. We had, JP Morgan only recently talked about Bitcoin and its potential threat and impact to the price of gold over the next few years. That just came out yesterday. We've got, and I think the biggest news, and you look at PayPal with their news. So they've announced that from January 2021, you can, wherever you see pay with PayPal, you can use Bitcoin. Well, that's 26 million merchants, 26 million people or organizations who sell stuff and use Bitcoin, use PayPal as a payment mechanism. That's a place where you can now use Bitcoin to buy stuff. So, you start to foster that into the mix and see that gradual institutionalization, if we can even say that, about this Bitcoin type technology. That's going to drive usage up, that's going to drive demand up, which in turn is probably going to manifest in an increase in price. I think for my money, though, if you'll excuse the pun, I don't like to see things like that and then say, and therefore Bitcoin's going to go up to $1 million. I think the only time you ever get near that kind of thing is when you pursue a kind of pure Bitcoin maximalism mantra. In other words, you assume that every fiat currency will die, Bitcoin will replace everything, and then you work backwards to say, well, what would therefore be the price of a Bitcoin? That's the only way you get near those kind of levels. But I do think that it's a reasonable investment. I do think that any sort of professional institutional money manager or high net worth individual probably needs to be considering, the idea of digital assets as part of their portfolio, albeit a relatively small part. I don't think it's I don't think it's an asset class which you can ignore any longer. I think it is the kind of thing that you probably would evaluate and consider bringing into your portfolio.
Okay. I mean, I think our customer base, obviously predominantly gold, silver, the tangible stuff. Can you explain to them, even briefly, why Bitcoin may be more than just a speculative asset?
Yeah, well, I suppose, at the moment it is a speculative asset. Most people who own Bitcoin don't use Bitcoin. But I suppose in terms of what it can do, you've therefore got to say, well, if it's not speculative in nature, what is it? Well, you therefore buy it for its utility. You buy it for what it can do rather than its price. Why is it of interest? So I've just, earlier today, I was talking to some people at HSBC. We were talking about the concept of a brain wallet. So the idea that, you can actually store your private key, which is your ability to access and move your Bitcoins. You can just remember it. It's just a code. You can put it in your head. Now, why is that interesting? Well, it's interesting because it means you can move money around the world cheaply, quickly, transparently, without any capital controls, without any regulators. If I tried to, and I'm not saying that's a good or a bad thing, I'm just saying it gives you utility. The legals and regulatory concerns are obviously a different conversation, but still important. But if someone suddenly sent me £1 million into my bank account, there'd be all kinds of red flags and questions to answer. Whereas in the world of Bitcoin, you literally have unfettered access. You become your own bank. It is the ability to perform transactions at your own discretion without any need for another third party or intermediary. Now, if you're there thinking, well, that's not, so what? That's not that groundbreaking. It's just a few people with some minor investments. The record for the largest ever Bitcoin transaction was surpassed last year. There was $1 billion transaction done, a single transaction in Bitcoins, and it was valued at just over $1 billion. And it took just 3 minutes to clear and settle. 3 minutes to move $1 billion without a bank internationally. That's impressive, right?
Yeah.
It's, I think a lot of people, when they look at the likes of, let's say, Bitcoin in particular, although I don't necessarily see it being the panacea, I don't think it being the answer to everyone's problems. A lot of people will look at, it's slow. It can only deal with, 7 or 8 transactions per second. Visa can deal with 24,000. It's never going to be a money replacement. But I think it's a bit like if you went back in time and went to see the Wright brothers doing their first flight. You'd look at it and go, well, they've only gone 500 or 600 meters and they're not that far off the ground, and you can only really get 1 or 2 people in it. But it's the principle, isn't it? It's the principle, not of what it can do now, but what could it do in the future? And I think that's the bigger idea. It's the markers and the foundations of where this technology might go. Because if 30 years ago, someone would have come up to me or whoever and said, in the future, you'll be able to use this type of internet money to bank without a bank, I would say, well, that's impossible. You always need a payment intermediary. It's been that way for decades, if not centuries. And actually now, although Bitcoin might be small in size, in terms of market capitalization relative to fiat currency, it is banking without banks, and it works, and it's worked for over a decade. That, for my money, is impressive.
Definitely. It's a really interesting perspective. I mean, touching briefly on banks, I've read a few of your papers recently talking about central bank digital currencies. What are those? I mean, aren't most currencies digital anyway now?
Yeah. So I think there is like you said, a confusion here, because like in terms of money supply, you even think about ourselves as individuals. You might have, a few notes or a few coins on you, but generally speaking, most of your money is digital already. I think a lot of this, it's kind of got 2 parts to it. The first thing is it's trying to take some of that underlying technology, that decentralized ledger technology, the blockchain technology, which underpins things like blockchain, take some of the benefits of that in terms of things like transaction speed, the ability to access a payment network, transaction costs, all of those things which are advantageous, bring them into an institutionally, effectively central bank sponsored structure, albeit you waive the rights of anonymity. So it's unlikely with a CBDC that you're going to get the anonymity that you're often afforded in a digital asset space. I think the other thing to think about, though, with CBDCs is the idea of what's often called digital dollars. I don't know if you've come across these or seen it I wrote a couple of pieces on this, but let me just give you an example. So when COVID-19 first happened in the US, Donald Trump's administration sent a $1,200 check to every US adult who earned less than $75,000 a year, sent them all a check to support them in a difficult time. And children got certain, I think it was $500 for each child. So people were receiving checks in the post to help them through. But what a lot of people don't know, I mean, obviously the US is a big country, but 1.5 million adults in the US don't have a primary bank account. So there was very much this idea of, well, we've just sent these people a check, and actually the people who probably need that the most, i.e. the people who are either unbanked or underbanked, have no way of clearing that check. And even if they did, you've now got to go out onto the high street and potentially take your check into a bank or a check clearing company in order to get cleared funds, to buy yourself food, to get yourself through this crisis. So it's kind of almost a recognition that maybe our existing monetary system doesn't work so well. And maybe there's albeit a minority, it's a significant minority of people who aren't financialized, they're almost left behind. So there's a very much a drive, which is part of the CBDC effort, of what's called digital dollars, which is where you're given a bank account with your central bank. So let's say we did that here in the UK. I don't know who you bank with, John. You might be a HSBC man, NatWest, whoever you're with, but it would mean tomorrow you would instantly have a bank account with the Bank of England, right? It might be your national insurance number, perhaps, right? And that would enable, you imagine in a COVID situation or any other situation, if they want to get money to you quickly, let's say they know you're a director of a certain type of firm and they want to support that industry, they could literally put cleared funds into your bank account and you would instantly have digital access to them. So that's the kind of area and angle that we're thinking about in terms of what might the next generation of fiat currencies look like. But I think if we want a guide for this, the place to look is China. China have been working on CBDCs for 4 to 5 years, according to what they've announced, and they've already started trialing that technology earlier this year. In Shanxi province, I think it was, they had 50,000 people downloaded the wallet app, and as part of that was incentivized. They got entered into a lottery, and if they were winning, and apparently there's a lot of prizes given, they were given complimentary CBDC as part of that lottery. So they're really kind of nudging their population to use it, and they're way ahead of most central banks around the world.
Yeah, I mean, it sounds unusual. You mentioned people having direct accounts with the Bank of England. Does that mean we're going to see fewer and fewer retail banks? Will there be a need for them?
Yeah, I think that's the biggest problem, and especially in the UK, where we've got such a strong and powerful financial services sector, is like you say, well, suddenly if we start going straight to the source and bypassing the retail banks, what's the point in the retail banks? Well, clearly that's a delicate balance. And one thing you'll see from CBDCs is that there's multiple competing models on how it might work. Some of which will enable you to only be able to access certain things via your retail bank. Others of which would be a kind of full volume. You're allowed instant access to the Bank of England, and if you choose not to have any retail banking involvement, then that would be fine. So I think there's a lot of things to be ironed out yet in terms of how it might work. But I think it is the general direction of travel in terms of the next incarnation of what future fiat currency might look like.
Yeah, I mean, I think one thing for a lot of people that purchase gold as an inflation hedge, they see central banks as being part of the problem in destroying paper fiat currencies. I don't think many of them are going to be too keen on having central banks looking after digital currencies. So would it be? Do you think it'd be a step in the right direction, or do you think it's just be central banks digging a further hole for everyone?
I think it's almost something there, because at first, I mean, if you look back at there's a few academic reports that have come out which looked at central banks around the world and their position on CBDCs. I think what it looked at was speeches that were given by senior central bankers across the world. It looked at how often CBDCs get mentioned, and it also looked at whether the statements were negative or positive. And what it shows over the last sort of 5 years is that CBDCs were used to be almost never mentioned, and now they're always mentioned. And it shows that the net sentiment score or index on the language being used was highly negative at the start and has now actually shifted to become positive. So if you see, like, for instance, last year, BIS, the Bank of International Settlements, who are the central bank of central banks, they surveyed all global leading central banks to say, what's your position on CBDC and what are you currently doing? And I think they found, I think it was in excess of 3/4 of central banks globally are running active pilots or research projects in the field of CBDC. So this is something which I think they've almost been forced to do. I mean, if you look at money generally, there's kind of a three-way split in terms of what the future of money might look like. The first is decentralized, and that's your likes of Bitcoin and the altcoins. That's the first candidate. The second candidate is corporate issued currencies. So this is your Facebook's, JP Morgan coin, Wells Fargo, all these kind of organizations who might choose and have chosen to create their own currencies, albeit normally backed by fiat currency, what we call a stable coin. And then the third candidate is, well, if I'm a central bank, I'm not just going to have people wrestle control of the monetary policy and supply away from me. And their defense against that might be CBDCs, hence the interest which is now sort of sparked over the last sort of 2 or 3 years. As to which one of those three wins, I think your guess is as good as mine. My money's probably on CBDCs because they're firmly in the court of governments and regulators and corporations, and corporations ultimately can be regulated out, like the likes of Facebook with their Libra project. And decentralized finance, although of interest and potentially superior, it's going to struggle to overcome that trust barrier, even though most people trust their governments and their institutions, even though lots of people don't. The majority of people do, and therefore Bitcoin and the altcoins, in my view, will tend to exist on the periphery. Still represent a viable investment, but just not going to perhaps take over the world like many people predict.
Yeah, I mean, talking of taking over the world, everybody loves a good conspiracy.
Yeah.
The World Economic Forum, they've been talking about a great reset over the last few years, which is scared a lot of people, rightly or wrongly, more government control. And I think with something like COVID, if it were to happen, it's certainly the right sort of kind of time. So what do you think will happen to Bitcoin and other private digital currencies if there is something where government, wants to take over?
Yeah, I mean, obviously from a corporate perspective, depends what happens. I mean, if you look at the likes of, let's say, Facebook is probably the lead candidate for corporate issued currencies, at least in a retail sense. So, the lead private currency issued by a corporation is JP Morgan's JPM coin. So JP Morgan are the biggest movers of capital in the world. They move, I think it's about $6 billion a day that they move. And their JPM project has currently got over 300 banks using JPM coin to move money institutionally, but that's not a retail product. And it's likely that that sort of involvement, if governments decide to up the ante and increase that regulatory oversight and restrictions, then obviously that could be curtailed somewhat. But I think that type of move would almost play into the hands of the likes of decentralized versions and alternatives like Bitcoin, because the harder things get cracked down on in terms of from an institutional sense by governments and regulators, the more incentive there might be for individuals to switch into decentralized finance, such as Bitcoin and the alternative crypto assets. I don't particularly see that being a flood or any kind of mass exodus, unless we saw some major currency shock in the markets and something significant happen. But it's just the fact that there is that kind of, I think for me the bigger play is the generational change which is going to happen. You've got the millennial and post-millennial generations coming through. Their perceptions and use in terms of what is money and how is it used is very different to generations that have gone before, and they're probably going to be much more comfortable using Facebook's coin or whoever else might issue them, in the same way that many financial services academics and researchers predict that the likes of your mortgage might come from Microsoft, and your annuity might come from Facebook, and Google might provide you with life insurance. And so a lot of these big tech companies are gradually pivoting towards financial services. And just to finish, John, I know I've kind of gone on a little bit there, but I saw a report the other day which showed that US tech stocks are worth more by market capitalization than the entire European stock market's market cap, which is just an astronomical statistic, isn't it? I think, US tech is worth more than the whole of Europe. Go figure, right? Go figure.
Wow, incredible.
I
mean, where does that leave? I mean, because we look at commodities and things like that, and we're seeing more and more of a fight between Bitcoin and gold. Do you see hard monies like gold and silver working alongside something like alongside digital currencies, or do you think they're going to be left by the wayside?
Yeah, I think they certainly could work alongside. I mean, there's already examples of, I think it's called Digix. There's a crypto asset called Digix. I think it's DGX. It's the Digix DAO, where they've issued or securitized individual tokens, which is backed by 1 troy ounce of gold. So the gold is kept in reserve. I think it's in like a Swiss vault account or something like that, which is audited by, I'm sure it's someone like KPMG or Grant Thornton, but it's properly institutionally observed in terms of that there is sufficient gold reserves against the number of tokens out there. And that sort of technology, that kind of asset backing of individual tokens, I think that's kind of interesting. The idea that we can, it's almost coming full circle back to the gold standard, the idea that I can then move around a digital token, which is effectively gold, but not gold. It's a promissory note, but it's blockchain enabled, which means I can store it easily. I can move it around easily. I can purchase it easily, perhaps more cheaply and efficiently than perhaps I'd have been able to do historically. So I think, we might start to see that kind of fusion coming along, where we see the new technologies being merged with, the commodities, which, are always going to have a place, the likes of gold, those kind of finite assets, which have not just a utility function, but also, that kind of psychological, that history as a store of value, that we're not going to be shaking that away anytime soon, in my personal view. But that's not obviously official recommendation for investment. I'm not regulated to give investment advice, but that's my perspective at least.
Yeah, I mean, I think in some ways the technology behind it, with blockchain, smart contracts, things like that, they've become more mainstream than maybe the coins themselves. I think with the idea of Bitcoin being a currency, a peer-to-peer currency, it's not doing what it's supposed to, which is one of the main criticisms of it, and why some people say it's doomed to fail because it's not doing anything like it was intended to. What's your opinion on that? Do you think it's something stopping it from improving in that regard?
Yeah, because I think obviously the volatility that's there is if more people use it as a functional currency, if there was more adoption of things like Bitcoin, and if it was brought more widely into the regulatory fold and oversight and approved, if you like, by nation states and regulators, we'd probably see that volatility massively diminish. In the same way that, if you're going to let a market be a free for all, then yes, it's going to be highly volatile, right? It's going to be open to market manipulation and all kinds of other things. Whereas that's not something we would see technically in a traditional market. So that's what it's lacking, really. But I agree with you. It's not what it set out to do. And obviously there's some barriers to adoption there. But then there's other alternatives as well. I mean, you look at, say, Ethereum. Ethereum is a currency in the same way, trying to be what Bitcoin is, but it's more than that. Ethereum is an infrastructure upon which other smart contracts and other business models and digital tokens can be platformed, if you like. So I quite like the idea of that kind of two-way investment with alternatives such as Ethereum. And if I cast my mind back to 2016, 17, the people I was originally turned by, if I can use that phrase, people who've been into Bitcoin and things for a while, their view was that Bitcoin would just kind of disappear. They were like, it's great tech. It was the first one. It led the way, but it's not the best anymore. And there's plenty of other alternatives. And I think the thing that they failed to see, and often they talk to me about now, is that they underestimated Bitcoin. And I think that we probably are all guilty of that to some extent. Bitcoin isn't the most efficient cryptocurrency. It's not the fastest or the cheapest or the most transparent or with the greatest capacity. But I think what Bitcoin has, which nothing else has, is that it was the first to solve the double spend problem and become mainstream and work. And that first mover advantage is worth a lot, right? It's like you and I could come up with an alternative for Facebook now that might be superior to Facebook, but I guarantee we will not supplant Facebook because it's in that prime position. It's going to take a hell of an effort to come up with. And I think Bitcoin benefits from that. It's not the best, but it was the first. And in the world of currency, that means a lot, because currency is purely, as you know, is a psychological construct. If we agree it's currency, and we all agree it's currency, then it gains in credibility and value purely as a proxy of that consensus, if you like. And that's a very difficult thing for Bitcoin to lose, if that's such a thing to say.
Yeah. So other than its adoption, what are the major flaws, sort of the fundamental flaws with Bitcoin? Are there any sort of things that should be looked at that aren't, or?
I mean, there's a few ones that kind of spring to mind. I mean, one is capacity. I mean, Bitcoin typically does about 7 transactions per second, I think I said before, whereas something like Visa's 20,000 plus transactions per second, which, a lot of people will look at that and go, well, how on earth could it possibly be, an alternative to future money with that kind of capacity constraint? There are things to look at that, that are improving on that. So things like the Lightning Network, I'm not sure if you'd heard of that as a kind of initiative that's happening now. And it's basically looking at trying to minimize the number of on-chain transactions to try and reduce the burden on capacity and improve Bitcoin's efficiency. We've obviously got the energy issue as well. A lot of people talk about the fact that Bitcoin uses about 1/4% of all global electricity consumption, which is more than Iceland, more than Cuba. And in a time where we're all supposed to be incredibly mindful of CO2 and environmental standards, etc., to have this decentralized digital virtual currency chewing up 1/4% of electrical consumption, largely due to mining activities, is something that's perhaps unreasonable for many, and perhaps is a barrier for many as well. I think the biggest one at the moment, though, is knowledge. As I said, I've been in it since 2016, and it's the kind of thing that I could sit down next to a CEO, and still people don't really know about it. They've perhaps heard of it, but that's it. Whereas other times you'll get into a taxi and chat to a taxi driver, and he or she might have an expert level of knowledge. It's one of those really strange areas where the knowledge and expertise and interest is very disparate in different parts of society, at all different walks of life and all different geographies. And until we kind of overcome that, I think there's always going to be a problem. And just to finish, just by example, I did a talk at a leading European business school on fintech and Bitcoin. And these were MBA finance students, 250 of them in a room. And I always ask the same question: who's ever owned Bitcoin? Who's ever used one? And in that room, I'd say about 8 people put their hand up, and they're young people interested in finance, right demographic, technologically oriented, and still they didn't use it, and that tends to be the normal response. Most people have heard of it. No one's really ever used it. And even if they have, they've bought it and sat on it. So yeah, some significant barriers. But as I said before, it's about potential more than necessarily about what it can do right now.
Yeah. Well, I think we can more or less finish it there. Is there anything that you're working on at the moment that maybe people should look out for, or are there going to be any big changes in the near future for crypto?
Yeah, I mean, there's a few projects that I'm working on. So one is, I only received the email yesterday actually from HMRC, invited me to come along. There's a founding meeting of potentially looking at a digital pound, DGBP. So and it's the likes of some various organizations that might be looking at that at sort of various levels. So that would be interesting to look at from an academic perspective, at least. It's certainly not a formal project sort of being announced or anything like that. It's purely just discussing the merits and demerits of what that might look like. I'm working with Crypto Compare. I don't know if you've come across Crypto Compare, but just looking at some data they've got on trading volumes particularly across unregulated exchanges, looking to try and verify volumes of trade that are reported by the different exchanges, given that they are unregulated, to give people more surety about trading volumes that are actually reported versus what's actually happening, which is quite interesting from a modeling perspective as well. So yeah, they're my main things. But I guess the other big thing I kind of forgot is obviously I'm at the University of Liverpool, and we're launching an MSc in financial technology and fintech, which is recruiting now, ready for launch in September. So obviously there's a lot of work going on behind the scenes to get ready for the new students there. So really excited to be leading that as Director of Studies here at Liverpool.
Wow, fantastic. Well, good luck with that. I think I think we're certainly moving in that direction. So I think it's good to see you on the on the front lines.
Excellent. Yeah, cheers, John. Thanks a lot.
So thanks for your time.
No problem.
If you enjoyed this video, be sure to subscribe to the Charged channel and keep up to date with our new releases by hitting the notification bell or by following our Instagram, Twitter and Facebook pages.